Hey everyone, I'm Raj Kumar, President and Editor-in-Chief of Devex, back with you as we continue a conversation series with our partners at the Hilton Foundation on the future of humanitarian action. There's really never been a more important moment to have this kind of a conversation. Today, we're going to be diving in to financial technology, so-called Fintech. And to do that, we've got our leading expert on the topic, Catherine Cheney, a senior reporter at Devex, who is here with me today. Hey, Catherine.
Hey, Raj, how's it going?
Great to see you. You are based out on the West Coast of the United States in California, and that's obviously a hotbed of innovation, of technology, maybe not the place everybody thinks of right away when they think about humanitarian work around the world, but actually it's highly relevant. Maybe tell us a little bit about the conversation that you're going to be having today.
Absolutely. Well, Fintech really is changing the nature of humanitarian assistance and potentially transforming the future of humanitarian assistance. I followed Fintech over the years for Devex, and really, with mobile payments taking off across the African continent, actually many companies out here in the San Francisco Bay Area are working on financial tools and products that actually are having a huge impact in development response and humanitarian assistance. I think a lot of what we'll be discussing in this conversation is COVID-19 presents a really interesting moment, because when you can't have boots on the ground, cash assistance is really becoming more front and center. And so then the question is, will this cash assistance powered by Fintech and more mobile phone adoption and all this technological innovation, will this continue when we're on the other end of COVID? I think that's a big question.
The context for this is a world in which humanitarian crises are becoming more numerous. They're becoming more severe, more protracted. We see climate issues, even where you're sitting on the West Coast of the US. Climate issues are, front and center, getting worse. And so all this is happening at a time when the humanitarian system is stretched really thin and is looking for ways to innovate, needs to innovate, really. And so the Fintech conversation isn't just an interesting kind of sidebar issue, interesting kind of tech issue. This is fundamental to what is the future of a humanitarian sector that needs to serve many more people and to do it more effectively and to do it potentially with a very constrained set of resources.
Yeah, absolutely. And I was going to mention, speaking of this momentum, just I think the world of philanthropy is paying a lot of attention to leveraging tech to do their work and to cash assistance as a form of assistance in this moment. But where do we go from here? It's such a critical time to have this conversation. And as with any conversation related to technology is not the answer. It's all these other things. So those are the things I'm excited to get into with these panelists.
Well, I'm excited to hear about that too. And this is the 25th anniversary of the Hilton Humanitarian Prize. And you can just see over the history, some of the names of the awardees, the laureates as they call them, are kind of big names in development and humanitarian and health circles. And others are these groups you haven't heard of. And when you look into them and you find out about them, as we have at Devex, they're really exciting, entrepreneurial, innovative groups. And I think the spirit of that is very much the spirit of this conversation series that we're hosting with the Hilton Foundation at Devex. We hope you're going to get something insightful, something new, something maybe changes your perspective as we hear this discussion. I'm looking forward to watching it, and I'll come back and see you at the tail end and we can discuss what happened.
Sounds great. Looking forward to it as well. Thank you.
Thank you.
Thank you all so much for joining us today from all over the world. It's really great to have your perspectives on this topic. And I'd like to start with Michael. We'll just kind of go one by one and get your take on what is this crossroads we find ourselves in, and then we'll talk together about where do we go from here. But Michael, you and I have spoken a few times, and a lot has changed over the years in this landscape. And you said that the motivation behind all of your projects is really about ending poverty with digital payments. That's what unites Give Directly, Segovia, and TapTap. So you've been a real pioneer in this space, and I'd love for you to expand on what is the potential you see and what more is needed for cash transfers to reach their full potential in transforming humanitarian assistance. And I'm guessing the answer is it's not just about technology.
Thanks, Catherine, and nice to see so many familiar faces on the panel. Let me start with the short answer, and then maybe as we go on, we'll go into more depth. I think I used to say a few years ago, but now it's more than a decade ago, the advent of mobile payments and the increasing prevalence of the mobile phone has changed what's possible in terms of the number of people that can be reached with payments. And that has changed the development landscape, it is changing the humanitarian landscape, it is changing remittances, and so forth. The reality is I can now sit at a desk in New York and send a digital payment easily to someone living in a refugee settlement in Uganda, as we do. And that's the technical piece. And that's just the tip of the iceberg with what's possible. I think as you think of any development program, there's obviously a targeting stage, there's a verification stage, there's the delivery, and there's the monitoring. And I think there have been changes in all of those phases, many of which are anchored to the phone, but not exclusively. And to give you one example, we're now working on a project in Togo where you can use people's cell phone data to identify how poor they are. So the relatively poor won't be doing monthly subscriptions. They won't be putting a lot of prepaid money on. They'll put in little, and you can tell people's location based on which towers they ping. So that's really powerful. That lets you say, without even kind of putting boots on the ground to go door to door, I can tell you who's relatively poor and where they're located, enroll them remotely, and pay them remotely. And that just wasn't possible a decade ago. So that gives you a sense of what's possible. Now, the good news is that we have seen change in the sector. I think if you look even a decade ago, I think we probably doubled the percent, or close to have doubled the percentage of humanitarian aid going through cash and voucher programs. Now, there's a lot of progress yet to be made, and I think there's structural questions. Where does cash fit in the sector? Because at one level, cash fits everywhere. Cash is helpful in improving health outcomes, nutritional outcomes, income, and so on. And another level, it doesn't naturally fit in any unique vertical, right? So we've sort of divided the sector. There's an organization dedicated exclusively to food security, one to shelter, and so on. And cash sort of says, actually, let's take a step back and not presuppose the answer that food security is right or shelter is right. Let's give the question to the recipient and let them decide which is right for them. So not at an institutional level, but at an individual level. And that, I think, is going to be one of the challenges for cash as we look ahead.
Thanks, Michael. And we'll get back to how do we work through some of those challenges. And a lot of it, like you said, is about structures and where does this fit within the sector. But I mentioned earlier that Give Directly works in Uganda. So just taking a geographical journey here, I'd love to direct this next question to Rashmi, since she's based in Kampala. And Rashmi, we heard from Michael about some of the opportunities to direct cash transfers, even without boots on the ground, as he put it, which is particularly useful right now in our COVID-19 response. What does that look like in Uganda right now? And how has the COVID-19 response highlighted both the opportunities and the challenges of cash transfers?
Great. Thank you, Catherine. Thank you, Michael. So in terms of the power of technology to lower transaction costs, to reach millions of more people, I completely agree with Michael, but he mentioned a couple of steps. And that's where the structural issues start. So he mentioned targeting, he mentioned verification, delivery, and monitoring. It seems innocuous, but the systemic issues around each of these single steps are extremely difficult. Let's take targeting. If Michael has to send, say, a $10 from his app to a mobile money wallet in Uganda, the first thing that needs to happen is the recipient needs to own the mobile phone, preferably, because of course you can have a SIM card, but very few people prefer that. So you need phone access, you need good network coverage, you need to have a mobile money wallet that is registered with KYC, so you need an ID. And identification becomes extremely important, and then everything follows. And more importantly, even if he sends me money, I need a cash withdrawal infrastructure. I need to be able to withdraw that cash. So I need agent density. Each of that in of itself is a systemic and challenging issue that needs to be tackled. So Michael clearly was way more succinct than I am. Now coming back to the issue in Uganda and COVID, so there are a couple of issues, and I'll keep this high level. So we had a portfolio of refugee work in Uganda. We worked to figure out, can you profitably serve 1.4 million refugees in Uganda? And we had a challenge with certain financial service providers. We are still figuring out some of these challenges, and fundamental issues like ID, like verification, fraud, ethical issues, all came out while we continue to work with refugees. In the case of the COVID scenario, Give Directly has done amazing work. They moved with great rapidity, tried to identify who are the poorest households. And of course, because of technology, because of mobile money, they were able to do it in multiple countries. But it's very interesting for somebody like me to see that the Kenyan government took the approach of unconditional cash transfers because the phone density in Kenya is upwards of 80%, individual phone density for adults. Whereas in the case of Uganda, which is a neighboring country, individual phone density is 54% of adults, according to the latest data. That in of itself is a sudden big digital divide. It also impacts how effectively Michael and his colleagues can target the right households, because if you are an extremely poor household, clearly you don't have a mobile phone, an adult doesn't have an individual mobile phone. The other piece is that because of this ability to target, one of the reasons the Kenyan government was able to do unconditional cash transfers in some situations. The Ugandan government, interestingly, decided to do food-based assistance in COVID. Of course, again, the political economies and of both Uganda and Kenya are different. Uganda is a surplus food producer. So when the government becomes an institutional buyer, there is certainty for farmers versus a Kenyan government where Kenya is not necessarily a food producer. So there are some of these political economy dynamics when we talk about fintech, we talk about humanitarian assistance, that are elephants in the room.
Thank you so much for that. And you mentioned Give Directly and its work, which is of course a nonprofit that Michael launched that has really disrupted the space. Other players disrupting the fintech space are of course startup companies across the African continent. And what I'd love to hear E's take on is, how are these startup companies disrupting not just fintech as an industry, but the potential of fintech in humanitarian assistance? So E, you founded Flutterwave with the aim of being the easiest way to make and accept payments from customers anywhere in the world. And now you're really working to support startups across the continent. So I'm curious, can you speak to their role? And maybe it's not just startup companies, but also the private sector more broadly. What is the role in developing fintech innovations that could have implications for humanitarian aid?
I think technology and innovators have a role to play in ensuring that development gets to the bottom of the pyramid and that it's effectively applied. A lot of what we do at the Fund for Africa's Future is supporting innovators to be able to bring innovation to change the lives of people and turn their biggest challenges into global business opportunities. And so when we think about the role that fintech could play, I think about it in 3 or 4 different perspectives. The first perspective is really from the point of view of how can fintech enable people to create wealth at the bottom of the pyramid. And when we look at things like asset-backed lending, when we look at the ability to leverage insurance to help protect people at the pyramid from shock, there's huge opportunity there that hasn't yet been fully leveraged. Second of all, there's obviously the global question of how do we make it easier for the relatives and friends and family or support networks of people at the bottom of the pyramid to be able to receive funds from all over the world. The biggest tax on poor people remains the horrendous tax on remittances. And a lot of it is because of arcane compliance rules that are put in place and a lot of discriminatory behavior by global financial institutions that continue to keep the poor paying much more than they should for remittances to get to them. And this was something we faced actively in my work while I was CEO of Flutterwave, and that we actively tried to stem. But it seems like if we're able to get identity right, perhaps there might be a fighting chance. However, I'm not holding my breath because it doesn't seem like the regulators in developed countries actually look at this as a development issue, right? And until they do, then financial inclusion cannot be complete, because all we're doing is including the rich without any consideration for the flows, right? Where, you know, the money will come from. So that's another angle. The third angle is, how do we make poor people more productive by leveraging fintech, right? And these are the kind of areas where, you know, it gets a little bit interesting, because a lot of people don't really think of these things as fintech. So you look at the work that platforms like One Acre Fund is doing, and also, you know, we just recently funded a company that buys all palm, shelled all palm from farmers, from smallholder farmers, to deshell them and then move them to the factory. The fact that we're able to quicken that cash cycle, that in itself is fintech, because we're able to give them value for goods that they've produced without having them go the summer without food, simply because they've spent, you know, a lot of the winter planting. So very important that fintech can actually get to help people at the bottom of the pyramid be more productive. And then finally, very similar to what the likes of Give Directly do, you look at platforms like Aid Bank, right, which is basically helping to bank nonprofits all over the world, and making it easier for you to manage the spend of global nonprofits. I think basically the global nonprofit market is easily approaching something in the order of billions of dollars coming into countries in official development assistance. And it kind of shocks me that no one has actually tried to really bring together that power, that $150 billion in international aid together, and leverage that to be able to, on some level, even invest, right? There's no reason why that money cannot be invested in those countries for fair return, in order to increase the potential of that. Instead, we look at this stuff as ad hoc, right? Ad hoc, and then that continues to shorten the cash cycles, and that continues to make it increasingly more expensive to meet the needs of the people at the bottom of the pyramid. So I think these are 4 or 5 areas of opportunity. I'm excited to see companies that are doing exciting about this.
Thank you, Ian. I learned about a few new companies through your remarks there, so I was jotting down some notes to follow up. Really useful. Ali, I saw that you were nodding your head as E was talking about expanding the definition of fintech. And I agree, that was a really useful way of breaking it down. What are you seeing at Village Capital and the organizations you're working to support all over the world? Many of them are working on fintech, or at least this broadened definition of what fintech is. So can you talk about what you're seeing and why this is an interesting, perhaps crossroads moment?
Yeah, he hit on a point that we talk about a lot at Village Capital when we talk about our work in financial health. And we've really been intentional about using the term financial health versus financial inclusion, because what's the point of including people in a system if they can't actually leverage that system to build a better life? So it's really important for us to both address the systemic gaps that Rashmi hit on, to bring people into the system, but then make sure that technology is helping them use the system to actually generate savings, to generate opportunity. And so we're really looking at our work and the entrepreneurs we support through that lens, through the lens of financial health, moving beyond just payments or just inclusion to make sure that that inclusion and those payments are being used for productive uses. So we've been seeing some really interesting things emerge around the world in our programming. So last year, we specifically launched a program in Europe called Fintech for Refugees, because we saw a huge opportunity emerging and a crop of companies emerging who were really focused on addressing refugee crises through the lens of both financial inclusion and financial health. Companies that are addressing issues of digital identity, creating digital identities that are mobile, but we're also seeing similar solutions pop up in the other geographies that we work in. Certainly, we've talked a lot about sub-Saharan Africa. We're also working in the Middle East and North Africa and seeing a lot of interesting solutions emerge. For example, there's a company, Hawiyati, from our most recent cohort in MENA, and they provide digital economic identities for Syrian refugees in both Jordan and Lebanon. And that identity information is going to help them provide credible work and credit histories. So these refugees, upon return to Syria, will have access will be able to access credit, will be able to access loans in a way that they wouldn't if this technology weren't available to sort of track their work history and help them build that credit while they're in Lebanon and Jordan. So those are the types of companies that we're seeing that are really exciting, addressing issues for populations that have been disproportionately affected, and whether they're internally displaced people or refugees in other countries, there's some really interesting things emerging.
Thanks, Ali, and I love that reframing toward financial health. That makes a lot of sense and something I should keep in mind in my own reporting. Alex, I want to hear a little bit more about Google.org. So I know that your $100 million commitment at Google.org to COVID-19 response is going toward health and science, economic relief and recovery, and distance learning, and that you're actually partnering with Give Directly on cash assistance. So a question for you, I mean, would love to hear a little bit more about why cash assistance. And I'll mention that Michael and I have talked about the value of cash as a benchmark, right? Donors actually asking themselves whether a particular investment is more effective than cash would be. So I'm curious, how does Google.org ask that question, why not cash? Does that come up in conversations?
Thanks, Catherine. Happy to be here. So just to give a bit of a primer on Google.org, since you asked, is Google.org really works to bring the best of Google to complex societal problems by really connecting innovative nonprofits with either Google's technology or funding or skilled volunteers. And our goal is really to use our philanthropic capital to help the sector take informed risks, spur innovation, and provide comprehensive support, especially for marginalized communities. With respect to crisis response, which is the efforts that I lead, we work to better prepare communities ahead of disasters, ensure effective relief, and then support long-term recovery. As we all know, when crises happen, reacting quickly, effectively, and collaboratively is the only way to help as many people as possible. Since 2012, we've committed over $25 million to cash assistance alone. And as we all know, providing cash assistance is a way to not only be effective, but provide the dignity of choice to recipients, enabling them to define their own needs. After disasters, cash empowers recipients to respond to their unique, complex needs. And it was really a core part of our $100 million commitment effort. And as I mentioned, we also match nonprofits with Google employees, and this is something that we did with Give Directly as part of our Google.org fellowship program, which enables teams of Google employees to work pro bono for up to 6 months full time with nonprofit organizations. This program I love is my favorite part of our team. It's the highest, most in-depth level of support we offer. And the program really grew out of a message we hear consistently from the nonprofits we support, that they want to do more with technology, but it can really be hard to find and retain the software engineers, product managers, UX researchers, and others whose skill sets companies like Google rely on every day to make our products. And with respect to our work with Give Directly, our fellows worked for 6 months to develop a tool called Delphi. It's a fully open source mapping tool that combines poverty data with storm damage assessment data to generate a list of the most impacted neighborhoods to target at a moment's notice. Preparedness is key, so the goal of the tool was to ensure that Give Directly and others that want to use it could respond rapidly to a potential disaster, ensuring that the communities in needs don't get missed by aid actors. So COVID-19, to bring it a little bit more to the present day, really brought with it a new understanding and the utility of data to aid relief. This is an area that we will continue to support, bringing together data, of course, in a privacy-preserving way to more effectively equip and prepare communities and response agencies ahead of disasters. You also mentioned the notion of cash as a benchmarking tool. And this is a study that we supported alongside Give Directly with USAID. And the study was actually released recently on Give Directly's work in Rwanda that found that a large cash transfers had a meaningful and significant effect on reducing malnutrition when compared to existing nutrition programming. This research highlights the importance of benchmarking various interventions against cash, and the framework of benchmarking cash is now being used by USAID in several studies in the development space, and it's something that we use internally at Google.org, where we measure and we ask the question in any effort that we do is, is the cash equivalent of this intervention net better, or however you want to define better, than just giving the cash equivalent. And what our previous work helped in moving the needle in the development space, I hope more recent work that we're doing now in the disaster response space brings it to the humanitarian sector. We'd like to encourage the humanitarian sector to benchmark disaster relief efforts against direct cash transfers.
Thanks, Alex. And that's really interesting about the research that Google.org did along with USAID and Give Directly. I will have to take a look at that. But glad to hear that that benchmarking question is happening in more places, from DC to Silicon Valley and beyond. I wanted to have a conversation now. I mean, so many things to pick up on, but one is, we've heard about targeting, verification, delivery, and monitoring. When we talk about how data and technology can really transform financial health and transform humanitarian response, it's across these areas. So let's just keep on technology for a second, and then we'll move to all the other things that need to change. But with technology specifically across targeting, verification, delivery, monitoring, what are some of the most exciting developments? I mean, I know our audience may be more or less familiar, depending on their background, with advancements in cloud computing, advancements in biometric identification, also a lot of the challenges that Rashmi was starting to pick up on in terms of, the digital divide, access to mobile devices. But what are some of the most exciting advancements that some of you are seeing that could really bring this space closer to the center of humanitarian response, really enable cash assistance? Just staying on the tech point for a second. Anyone who wants to jump in?
During the pandemic, there was an interesting experiment that was done by a few techies, which was basically, I think it was called the name of the. Basically, what the initiative tried to do was basically, on the basis of some parameters that were pulled from your bank account details via the central switch, they would be able to appraise whether you needed a stimulus, a 10,000 naira stimulus. So that would be roughly about $20, right? A 10,000 naira stimulus or not. And this was in the very early days of the lockdown in Nigeria. And this was super helpful to a number of people because, at that time, a number of people hadn't been paid, they didn't have any cash. It was very difficult for them to get access to food. And this helped. And I think they've taken that forward in other ways. But what's really interesting, at least in the fintech space in Nigeria, is seeing more and more access to bank accounts be given, obviously on a controlled basis and with the permission of the individual, to third parties who can then appraise them for financial need. Obviously, there are other use cases for the same thing, but this is really helping to create some level of discrimination, positive discrimination, that can allow people to identify who's in need of support and immediately disburse to them using the central switch. So that was a really good, I think it's called wearetogether.ng. My people just reminded me. Wearetogether.ng. Yeah, thanks.
That's a really interesting example. And Rashmi, I see you wanted to jump in.
Yeah, so exactly as E mentioned, you will notice a lot of this targeting based using data trail proxies to do targeting of poor households. So we are together, then Give Directly. There are a lot of other NGOs that try to do it. Again, one of the fundamental rails and assumptions that it rests on is that these households have consistent digital access for you to allow that for a proxy. So that's point one. In the case of Uganda in the East African region had one of the most strictest lockdowns. The first case and the entire country went into complete and total shutdown. Now, there's different types of tech implications on businesses versus individuals. So I'm just going to speak to the small businesses first. A lot of the small businesses, like including your fresh produce vendors that you go to your local market and you produce, you get your apples and oranges and things like that, they are all non-digital. But a lot of we don't have the Nigeria style e-commerce platforms yet. A lot of our e-commerce are nascent and still budding, but very strong. So they pivoted, including one of the Uber-like transportation, motorcycle taxi companies. They pivoted to onboard these informal merchants and get customers to buy products from them so that these small vendors don't go back into, are not left worse off. So a lot of small businesses and platforms that do the supply and demand matchmaking allowed for that pivot to happen and allowed for that step change for digital adoption. So that was one thing, and that applies to health, that applies to a couple of other sectors. Now coming to individuals, the people who had access to mobile money or banks had no other option but to choose digital. So even people, there are a lot of people who prefer going into a bank even though they have mobile banking services. They just prefer the human interaction. But because the country went in lockdown, everybody were forced to use digital services. So there was, again, another step change in customer behavior, in adoption behavior of technology and level of comfort, because after 3 months, you've done enough number of transactions to allow for it. Of course, there were other factors like financial service providers, like mobile wallet providers and banks, offered free like there were no transaction charges if you were on the same network or if you were doing bank to wallet push pull, which also created an additional incentive.
Any other thoughts on technology enabling this shift, or some of the factors that Rashmi was highlighting? Lack of access to mobile devices, poor internet connectivity holding back this shift depending on the context?
Maybe I'll offer a little bit of both. One of the things that we think is particularly exciting is the role that fintechs are playing in essentially creating new paths to work around KYC regulations, particularly for displaced populations. And we're really excited about the role that software can play in helping to create systems, for example, where there is sort of identity-less peer-to-peer cash transfers. There's a company called Arcadia Blockchain that's based in Switzerland, who is specifically building software to work with NGOs to help facilitate this peer-to-peer cash transfer that doesn't require the same level of traditional documentations that a financial institution would require, which a refugee, for example, typically does not have. So that's the exciting side. On the sort of potential barrier side, or the scarier side, is we need to be talking more about data protection. We're talking about lots of really sensitive identity information, and particularly as you're moving from cash to inclusion and thinking about how do you help use cash transfers to build credit history, to build opportunity to build financial health. How do we make sure that as individuals get into the system, they use the system, that their data, particularly the most vulnerable populations, that their data is protected and secure? And I think that's something that we should collectively be talking more about too. So we're working with IBM, and they have this HyperProtect accelerator that's specifically looking at companies who are working on some of these issues. But I think there's a lot more conversation needed about data protection and security too.
I totally agree. So moving to that topic, which I definitely want to cover in today's conversation, Alex, earlier you mentioned data being collected in a privacy preserving way. Can you speak a little bit more about that? It's something I'm pretty familiar with, having covered Google in the past, but what do you mean by that? And how can tech companies be real partners in this effort? But what are some of the safeguards when it comes to preserving privacy?
Yeah, it's a great question, and to echo what Ali just said, is it should be concern number one when it comes to any technology that gets deployed in the space, is making sure that any information that's collected for either enrolling or dispersing cash is done in a very secure way, and it's something that tech companies can offer a hand in from a pro bono perspective. Is we have advanced technology to help ensure that our data from our users or even our employees is encrypted and it's disaggregated in a way that that really preserves the privacy and the security of that information, which, especially with financial information, is some of the most sensitive that exists. So I think it's something that we've wanted to invest in our projects that we work with several grantees. It's one of the offerings that we have is, do you want to talk or work with folks either in our cloud division or our enterprise software division to make sure that you have access to the latest technology that ensures that any data that's being entered into your systems, and doesn't need to be in our systems because we're platform agnostic when it comes to our work, is done with the latest best practices. So just wanted to echo that as being a concern number one, and something that needs to be advanced in any project in the space.
Thanks for that. And to tie some of this together, I'd like to go back to Michael. So Michael, you mentioned your work in Togo, for example. I'm sure Give Directly is bumping up every day against both the opportunities, some of the opportunities we've talked about with tech advancements really supporting the shift, but also some of the challenges that we've heard from Rashmi in terms of mobile phone ownership, for example, and data privacy and security, I know, is front and center to the work Give Directly does. So can you talk about how are you seeing all of this converge in the places where you work?
That's a big question. And I should thank Alex for describing our work together much more articulate than I did, so thank you for that. Google has just been a tremendous supporter. So I would bucket this in two broad buckets. One are issues where there are trade-offs, and we need to measure carefully what that trade-off is. And a classic example of that would be the fact that, of course, not everyone will have a phone in Uganda or Togo. So if you use something like a targeting mechanism based on phone data, you're going to naturally be excluding some people. And you need to be really thoughtful about that. You may complement it with other ways of targeting them. And you're going to lose them. With any program design, you're going to lose something and you're going to benefit in some ways. So you may get greater scale, greater efficiency, frankly, greater integrity. Is, in my view, the fewer people that touch something or make ad hoc decisions, the more robust the system is. So there are those trade-offs, and you need to lay those out very clearly. There's a whole second bucket of problems, which I put under the more structural category, so less about specific program design and more structural. One is the regulatory hurdles, which he touched on. And there are reasons for many of the regulatory hurdles, including incentives. If you have a particularly strong banking sector in a country, the banking lobby has a very strong incentive to make sure that mobile money doesn't take off, right? And you see that, and we all know the countries for which that's an issue. So how do you manage the regulatory piece in a way that kind of offsets some of these incentives, and then balances a certain degree of practicality? And you see this with some of the European regulators now that are quite good, which is, look, if I'm sending $10 somewhere and the person doesn't have the perfect biometric digital ID, that's probably okay. Like $10 is not going to be the main source of kind of money laundering across borders. Now, if you see someone sending $10,000 4 times a day, so you need to be very thoughtful about what those AML requirements are. The second piece is, outside of the regulatory piece, are the incentives for adoption of technology. So I think, and maybe this is provocative, I think we are at a point where a lot of the technology to take the next leap exists. I don't think this is a question of technology's existence. I think it's a question of incentives for adoption.
I want to bring up a question actually drawing from a Devex opinion piece that we ran on this topic. and just get your take. I think it'll be a good chance to hear from each of you. So Devex ran an opinion piece on 5 ways cash transfers are improving humanitarian response. And it concluded with this question. And this kind of gets back to something we were discussing earlier about where this fits within the system. Humanitarians face a fundamental choice. Do they fit cash solutions into our existing systems, or do they embrace the cash challenge by changing the way they organize, plan, and deliver humanitarian responses across the board? So a lot of this has to do with implementation, and we are really at a crossroads now with COVID-19. So if there is a time to figure out the answer to this question, it's now, and as we come out of this crisis. So any thoughts on what does this look like? And you know, just keeping in mind, many of many people tuning into this webinar are thinking through these questions right now in real time at the organizations where they work. So just to repeat that question, do people fit cash solutions into existing systems, or change the way they organize, plan, and deliver humanitarian response? How does cash really become front and center? Through which path? So does anyone want to jump in on that?
I think it's the impossible question, but it's the right question. And there's a question of what's the preferred end state, and it's a fun question to think about. And then what's the practical path to actually getting there, which I think is a more challenging one. The way I've thought about this a bit, to oversimplify, is how much funding goes to cash and where does that decision get made? And then how do you deliver the cash? The second one I actually think in many ways is an easier question. I believe that NGOs and the institutions and the private sector should compete on who does the best job of getting cash to people. And I think competition is often viewed in a negative frame in the development space, but I think we're competing to do the most good for recipients. So I think if we had a clear rubric by which we'd assess what a good or bad program was, I think we can get there and figure that out. And maybe it's a big organization that does it better. Maybe it's a collection of small, who knows, but I think we can do it. The question of how much funding goes to cash is a tough one. I think a lot of it now gets made so high up in the food chain. Honestly, it could be congressional earmarks from ages ago. It could be the allocation to across the UN system. So it's hard, but the way I think of it is there's 2 bits. There's the what is unambiguously doing worse than cash. And what I mean by unambiguously worse is, let's say hypothetically there are 5 dimensions we cared about: education, health, income, whatever the other 2 are. If on every dimension that you can measure you're doing worse than cash, we should probably stop doing that. That's an easy one. And in some sense, the recent project with Google sort of looks like that. It was a training program against cash, and cash outperformed the training on every dimension except business knowledge. So that seems relatively straightforward. Now, the much harder situation you're going to be in, which I'd expect or certainly hope we get to, is cash does better on a few dimensions and worse on other dimensions. So maybe your best education intervention does better on education than cash, but cash does better on health and income and other things. And now you get to the question of what's better. And that's a really hard one, and I don't know how the sector gets there. The cash answer would be whatever the recipient wants to do is better. So you may have 2 neighbors. One decides their newborn's health is more important than their secondary school-age daughter's education. Now, that's an impossible choice for anyone to make. But why not give it to the recipient themselves and put that choice as close to the person as possible? How we get the aid system to say what fraction of aid should we take our hands off and give autonomy to the individual? I don't know. And then how do you have that conversation about whether it's 50% or 60%? I think we all agree it's a lot more than where it is now, and it's probably less than 100%. So where that is going to be a very tough discussion.
Sorry, Catherine, I'm going to quickly jump in because I've heard this, and I just want to clarify from multiple panelists, because I'm slightly just a clarification point. When we talk about cash, a lot of the conversation we've been talking in this webinar and discussion has been around the demand side. So I agree with Michael, Ali, E, and Alex on the fact that yes, there are certain dimensions. What is our preferred end state, and what dimensions is cash going to outperform other types of program design? But cash is not going to solve supply side issues. It is not going to solve regulatory issues. It is not going to solve if you just don't have a hospital. It is not going to solve any of the teacher absenteeism, poor quality of teachers. And the fact that for most emerging economies, the social sector budgets have just kept going shorter as a percentage of the overall budget pie. So things like that, like thinking of it as an ecosystem, if we don't figure out those along with what Michael and everyone mentioned, what will happen is the poverty penalty will be paid by poor households, because you will end up paying more to send somebody to the nearest withdrawal agent, the nearest education or better education school. So I'm assuming we would like to avoid that. Sorry, this is a clarification question because I was a little confused.
Oh, for sure. A lot of my comments have been on other direct interventions, the proverbial goat. I think cash is certainly not going to solve either systemic issues on the regulatory front or things like public goods, right? Cash is not going to discover vaccines or build armies or roads or other public goods. Now, I do think we should continue to improve our measurement of those kind of larger public good investments. And I think it's extraordinarily hard to do that. You can't run a kind of randomization on vaccine discovery or things. But for sure, cash does not solve those public good problems.
I'm really glad you posed that question though, Rafi. It's something we should make sure to clarify. Go ahead, E.
Yeah, I mean, if I can say something, while cash will not solve these problems, cash creates a market for innovators who can. So I think that's something that the aid community also has to ask itself. One of the challenges I feel that the aid community has had over years is that, it often comes in with very expensive, high capital intensive solutions to problems. And obviously, people don't have choice with respect to at what quality and in what quantity would they like such goods to be delivered to them. The benefit of cash is that they can now control what they need, right? And so, maybe they don't need a hospital. Maybe they just need a primary healthcare center with 2 attendants, and not a doctor, because they're not always getting that sick. But they don't have those options in a scenario where cash is not an option. So I think cash is important to solving the problems. It's not the solution, but it is important to creating a market for solving the problems.
So I know we're running out of time here. Well, it's a really exciting time for exactly what we're discussing, not only because of the way technology has advanced, but also because this crisis we find ourselves in with COVID-19 has really put cash assistance in the spotlight. So it'll be really interesting to see what data is being gathered, what lessons are being learned, and what will it take to really ensure this is the future. And as we discussed today, the answer to that is far more complex than technology itself, as it always is. Really appreciate all of your insight. Thank you so much for your time.
Catherine, that was a fantastic conversation. Congratulations on kind of corralling all of those ideas together. And I think having a really provocative discussion about what the future of the humanitarian sector looks like and where cash fits in. I was particularly interested in this whole idea of cash as a benchmark. What did you take away from that part of the discussion?
Same. I mean, I know that's something that Michael has talked about for years. How do we use cash as a benchmark and stop doing the things that, as he put it, are unambiguously worse than cash. But to hear that Google.org is actually looking into that, and I assume at this moment during COVID-19 response, there's a lot of cash going out there. Hopefully that's being measured and tracked, and then that question is being asked, well, should we keep doing what we're doing? Or if cash is working better, should we consider replacing not all, as we covered, but some of our programs with just cash?
And it does make me think of the article that Devex published by our colleague at Voss Saldinger a couple of weeks ago, I guess, on Google.org's work with cash in Rwanda. Maybe tell us a bit more about that.
Yeah, so Alex mentioned this, and it doesn't surprise me to hear that we covered it. I need to revisit Advaz's article, but turns out that not only is Google.org considering cash as a benchmark, but actually studying what does cash look like as compared to other interventions. So they're working, he mentioned, with USAID and with Give Directly on a study in Rwanda that looks at this, and it's part of, I believe, a suite of studies that are gonna evaluate those impacts. So fascinating to me to see that a tech company out here on the West Coast is working with a bilateral donor, is working with this real disruptor in global development, Give Directly, to explore the impacts.
And this is why I think it's such a disruptor, the idea of cash, because it becomes very competitive, right? Whatever program you might be working on, you might be designing, you now have to make the argument that it's going to be more effective than just giving it away in cash. And there's obviously real opportunity to do more in cash. So I think it creates some real competition and some real disruption in the way the humanitarian sector works. Is your takeaway that this is an optimistic moment, that we can turn these technologies into something that's going to deliver more impact for people who need it? Or where do you think we are based on the conversation you just had?
I do think I am optimistic. I think there's agreement among the panelists that there's real momentum here and a real opportunity. And I suppose when it comes to will this sector seize this moment, that's why conversations like this one matter. It's just about highlighting the impact we're seeing and asking the tough questions that need to be asked when we're on the other end of this crisis. Otherwise, you know, if there's an opportunity to come out of this crisis, this is maybe one of those silver linings we're seeing, learning what kinds of support might be more effective. And if we miss this moment to seize that opportunity, then, you know, that's a real shame.
Yeah, I always get skeptical of development fads because there have been so many, and many of them have resulted in failed aid projects and large sums of money and large amounts of effort being wasted, sometimes even counterproductive, you know, harming people. What's, I think, hopeful about this opportunity around fintech and cash is that there's so much focus on study, on randomized controlled trials, on really doing the monitoring, doing the evaluation. A lot of these are being led by economists. There's a sense of like, let's really understand what this is doing before we scale it up. And hopefully that rigor is going to make sure we avoid some of the mistakes of past sort of fads in the development space.
The one thing I would add too is I really appreciated the points that Rashmi was making and just sort of making it real based on what she's seeing around her in Uganda and some of the real challenges. So while there's a lot of excitement about the potential of cash, remember, this is powered by tech. This is via mobile devices, and it makes this imperative of connecting the unconnected and making sure devices are affordable and that people have digital skills. All of that being critical development work, it makes it more important now than ever.
It does, and the pandemic really brings that into sharp relief, you know, for everyone, whether if you have internet, if you have access to electricity, if you have, you know, all those basics, life is very different than if you don't during a moment like this pandemic. And so fintech, you know, it's going to become that dividing line. If really everything moves to mobile money and moves to direct cash, it could be make some of the inequalities exist today even worse. That's a really important point that came out of the conversation today. Well, look, Catherine, great discussion. This is something we are going to continue to focus on at Devex. It's one of the big themes, I think, underlying where we're headed as a development and humanitarian community. And I think that's why it's so important that it's part of this 25th anniversary of the Hilton Humanitarian Prize, this symposium, this series of conversations. It really is a key pillar of what we all need to be paying attention to. Whether you work in fintech or not, you need to know about this. So thanks for bringing all those insights to us today.
Thank you.
I want to turn over now to one of the leaders of the Hilton Foundation, who's our partner in this series, Lisa Bomer, who is a senior program officer there for international programs, focuses in particular on early childhood development in Africa, has much of her career and much of her current focus is on young people who are living with HIV and AIDS. And we're going to hear from her, a message from her, and then we'll come right back.
Thank you, Raj. I found this a fascinating panel. And for me, I'd like to share 3 takeaways. First, as Catherine said, COVID-19 has put cash assistance in the spotlight, and many philanthropic organizations are now looking at cash support that traditionally have not funded cash approaches to humanitarian assistance. Conversation has surfaced the promise as well as the challenge involved in this work. Second, Allie's point that cash provides people in communities with decision-making power and control as opposed to traditional aid programs is compelling. For us in the philanthropic sector, the call to evaluate what we're spending on traditional interventions versus what we would spend on direct cash transfers is a fascinating one and something that we really need to look at carefully. But I'd argue it's not an either-or choice, as often complexities of people's lives call for different approaches depending on the outcomes we're seeking. For example, the blended cash plus care model has been very effective in the case of efforts to improve HIV treatment adherence and well-being for adolescents in Southern Africa. And there's certainly many examples of combining cash, training, or other supports for longer-term outcomes, I would argue, including financial health. Third, I thought Rajni really hit the nail on the head. We need to move beyond a focus on just the technology, which sounds simple, to the complex task of delivering the cash and the process for targeting, verification, delivery, and monitoring. This raises the question of how we can better support grassroots organizations, local actors that know their communities well and are thus well placed to guide targeting and community preparation, particularly when the most vulnerable don't have access to a cell phone. I'll close by encouraging us to further consider the benefits as well as the potential perils, the unintended harm that can result, particularly given gender dynamics. For example, when a woman receives a payment on her phone, this might create conflict with her partner and lead to unintended consequences, including intimate partner violence. This example calls for the marriage of newer approaches like cash transfers with traditional investments in community mobilization and preparedness so that cash can land safely. My point being that often transferring the cash alone isn't enough. At the Hilton Foundation, we've been exploring a partnership with Give Directly that pairs both the dignity of individual decision-making that cash provides with supports to grassroots organizations to provide an enabling environment for cash transfers that benefit disadvantaged families with young children, particularly in this age of COVID-19. One thing is for sure, as the technology evolves, the method of delivering aid will too. And the more care and control we can put directly in people's hands, the greater agency they'll have to make the decisions that are right for them and their families. Thank you.
Well, I want to thank Lisa Bomer for that message. I want to thank our partners at the Hilton Foundation. And I want to once again draw your attention to the 25th anniversary of the Hilton Humanitarian Prize. It's the reason why we're here having this conversation series on the future of humanitarian action. The series continues on October 20th with a session called Breaking the Cycle, taking a look at gang violence in Central America. I urge you to all be a part of that conversation as well. And I thank you for joining us today.